what we're looking for is at the core of any concept is the indicator type. We know that the foundational pillar of technical analysis is identification of trend. I would argue that MACD is primarily a trend indicator. If you look at the underlying nuances of this particular indicator, however, we can certainly deduce it down to a momentum indicator as well. So a trend indicator and a momentum indicator within it. Now, if you go to fidelity.com and you type in MACD into the top right-hand side corner, you're going to come across this particular article, which describes the indicator and then gives you some pointers and tips in terms of how to read it, what it means, what are the signals, things of that nature. That would be kind of your cheat sheet, if you will, right? If you want to come back to it at some later date, some of the stuff that we're talking about is going to not stick very well. But we're certainly hopeful that it will stick, okay? So, Peter, I got my Active Trader Pro up, and why don't I go ahead and get us started? I'm going to minimize the moving average convergence divergence indicator and talk about its core components first. You have all heard of moving averages before, haven't you? I'm hopeful this is a very small group here of participants. I'm not surprised. How many of you use some sort of a moving average? By the raise a hand or throw in a comment, let us know what you use right now. Moving average convergence divergence is an indicator that is basing itself off of two exponential moving averages primarily. Those exponential moving averages are at the speed of a 12 period and a 26 period. Okay, so you know that for me personally, I'm not an exponential moving average user generally in my work. I primarily use simple moving averages that kind of keep it simple because I'm a simple kind of guy. But exponential moving averages certainly have their benefits, right? What's the difference between an exponential and a simple? Well, an exponential moving average is a weighted formula of prices in the numerator, of closing prices, that is, while the simple moving average is just the summation of closing prices in the numerator for the period. The weighting is not linear either. The weighting is substantially more driven towards the recency data. So the recency bias, right? It applies substantially more weight to the latest additions to the numerator in terms of closing values and applies the least amount of weight to the furthest dated laggards. Okay, so if I'm looking at a 12-day exponential moving average, I have 12 closing prices over 12 periods. Period would be the frequency and observance. So if I'm looking at a daily chart, that will be daily. So 12 days worth of action, weighted formula, substantially more weight towards the last couple of days worth of data, substantially less weight towards the data that came about 2.5 weeks ago, and you get the numerator value. Then you divide that numerator value by the period in observance. That's how you get a new data point each and every day, and that dot is plotted, right, and added to the chart. So how is the 12 different from the 26? Well, it's different in the sense that it's going to be much more reactive to what the price is doing. It's a shorter time observable moving average, versus more of an intermediate term time, right? 12 goes into 26 at least 2 times. So 12 will be about 2 times as fast as the 26. Okay? Now, what the moving average convergence divergence indicator is doing is it's looking at the difference between the two lines. So it's saying, where is 12 in relation to the 26? Where is the shorter term one in relation to the intermediate term one? Is it below it or is it above it? If it's below, the slope of the MACD line is going to be negative. If it's above, then it's going to be positive. The further down the shorter term one is below the intermediate term one, the grander is going to be the slope, right, of that negative observance. And vice versa. The higher the shorter term one is above the intermediate term one, the more positive the slope of that line is going to be. Okay? Now, we're going to go ahead and break this down and sort of apply the mechanic, right? So the idea is to look at the moving average convergence divergence indicator, let's say without the signal line first and without the histogram. So effectively, what are we looking for? We're looking for the slope of the line changing and the dynamic of trend. Now we understand that if we look at Lululemon, and I picked Lululemon for a reason. I'm going to talk about the reason why I picked it in just a moment. But you see that it went from positive 20 over here to negative 29, and now we're sitting at around -6, right? So where is the short-term moving average in relation to the intermediate term moving average? Is it closer to it or is it further away from it? So observing this particular indicator through the prism of the MACD line in and of itself, this red line down below right now, what sort of a trend is Lulu in right now? What would you argue if you're sitting in the audience? No wrong answers, by the way, folks. I just want to engage you, right, in the utility of this particular indicator, at least the way I would be thinking about it as a technician. What would you argue is the trend? Well, if I'm not getting any answers, that's fine. So David is saying down. David, all right, you're the first taker. All right, down. Looks like it's going up based on MACD. Downward, moving sideways. Ding, 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 right? So Thomas, with an appropriate answer, I think, for the current observation. So let's draw a few lines on this chart. Let's say that when the slope of this line is very clearly positive, it is evident, right, that the trend of the security is higher. Higher highs, higher lows. The higher it goes, the further away you expect the shorter term moving average to get above the intermediate term one. When something is in a clear downtrend, when it's making lower lows and lower highs, the trend of this line is going to be negative, right? And the price of the security is going to be making lower lows and lower highs. What is it doing at this moment in time right now? It is positively structured, positively oriented. Why do I say that? Well, because we have made a series of, at the very least, one substantial higher low so far. But the slope of this line is flat, right? And the number associated with that line is still negative. So we know that we're not in an uptrend, but we are seeing what is known in the industry as a positive divergence. It might be counterintuitive if you think about it. Why would it be positive, right? If the security is making lower lows in price terms and the MACD line is still has a negative value to it. The reason why this is called a positive divergence is because price made a low here at the level of $340 or thereabouts, went slightly higher, made a substantially lower low at let's see, what was the low here? $295. What did MACD do in that time? Did it turn back down? Yes, but it made a substantially higher low. Price went a little bit higher still, and then regressed back to retesting these prior lows. What is the MACD line doing? Is it coming back down and retesting those prior lows? And the answer is no. So what we can then deem this to be is a positive divergence of momentum on the downside, and price in the preceding downtrend is starting to slow down. Okay, it doesn't mean that price can't keep going lower or cannot make a strikingly lower low below the most recent lows. But what this is telling us is that the thrusts downward, if you will, right? If in this overarching downtrend is substantially slowing down in its pace. And the thrusts higher, when the price moves higher, are becoming substantially more positive. Now, if you were a bear, right, and you're looking at something like this, you certainly need to be on alert. Again, it doesn't mean that Lululemon cannot keep going lower. There's nothing bullish in price terms about this chart, but there is certainly a bullish momentum divergence that is happening, that the bears are failing to make lower lows consistently. Therefore, those moving averages basically are sitting right on top of each other, and prices consistently interacting with them, right? When they were acting as relative levels of resistance on the way down, now they're starting to be disrespected by price a little bit. And the first acceptance above those moving averages will probably indicate a trend change. And the momentum down below through the prism of MACD is already starting to signal that, right? Now I'm going to go in here and I'm going to say, well, what in the world is the signal line then? The signal line, folks, the dashed green line, is simply a 9-period exponential moving average of the MACD line. So I'm taking the red line and I'm slowing it down. Okay? And the reason why I'm doing that is because I'm trying to eliminate the noise of the MACD line whipsaw back and forth and make it kind of less reactive, giving me a clearer depiction of necessary action if I was going to take it. Okay? So what would you prefer to see, of course, right? If you are a bull, for example, in Lulu waiting for the turn. Well, you want the positive divergence to be here, which there is some. And you want the MACD line, the red line, to consistently be above the signal line. You prefer, as a bull in Lululemon with a trend change, to see both of these lines get above the level of 0 at some point. That would signify the fact that the short-term moving average has finally taken over the intermediate term one, right? I'm just going to drop a 0 line on here, make it dashed, make it, I don't know, blue or black, and say we would prefer for the true trend change dynamic to happen, right? for both of these lines to get above the level of 0 at some point. What would have to happen in order for that to happen? Well, the price would have to go substantially higher. New values of price would have to be weighted with more authority in calculations of the 12 and the 26 exponential moving average as all data is falling off and getting less important from the recency bias standpoint of view. And eventually, right, the only way that that does happen is if price breaks this current funky trend and gets above the means over the past 2.5 to 4.5, 5 weeks worth of average price. So that's it, right? We're looking for the crossovers, just like we are when we're using exponential moving averages or simple moving averages. We're looking for those crossovers. They're kind of signaling the idea. We're also thinking about where is price in relation to those moving averages. We want price to be above moving averages, right? If we want to be bullishly oriented, or below moving averages if we're bearishly oriented. But it's also keeping this idea of not only will it be signaling or telling us where the potential trend change is occurring, but also the divergence, the potential of something that is brewing under the hood that we need to be cognizant of, right? If you are full out bearish in Lululemon right now after a drop of this magnitude, you really need to be on alert because it could change, and if it changes, it could change quickly. So if you're a bear, you're really trailing down your stops to make sure that you're not giving up a whole lot of gains here, right? So where did the signal line, the MACD line, cross the signal line? On the 26th of December, 2023. When did it break trend? Somewhere around January 2nd. If you waited for the exponential, shorter-term exponential moving average to cross down underneath the intermediate-term moving average, right? You stayed in Lulu all the way until the 18th of January. Now, it still wouldn't have been terrible. But with the benefit of hindsight, MACD gave you those signals way before when the trend was changing, right? You knew when you needed to be trailing up your stops if you were a bull, especially if you're a bull in a very short term. Now, the last piece of the equation, and Peter, I promise I'm gonna give you a little bit of time to speak here. I'm sorry that you had trouble with the system. I know how frustrating that could be. The last piece of the equation is this histogram view, right? And folks, the histogram is very simply a visual aid for you to understand how far away is the MACD line from the signal line. The larger the histogram bar, the further away it is. And if the histogram is pointing negative from the 0 line to the downside, you know that the MACD line is below the signal. If it's positively oriented to the upside, you know that the MACD line is above the signal line. And the further away it is, right, the higher the bar. And if it's above the 0 line, then you know that at that time, the MACD line is above the signal. So it's a visual aid to, again, put it all in perspective, to simply be able to look at the lines, their relative slopes, whether they're in the positive or negative territory, and then look at the histogram to confirm, right, what your eyes are really telling you at your first glance. Now, Peter, I'm going to turn it over to you, I promise, but the reason why I say that this is a trend indicator first and foremost, and less of a momentum indicator, in my opinion, is because most momentum indicators, and the ones that I prefer to use personally, are always oscillators. And what that means is that they have an absolute top and absolute bottom, right? They have a value above which or below which they cannot go. So they give us this sense of like, hey, what does overbought look like? Or what does oversold look like in the relative sense as it pertains to a period in observance, right? That we're looking back upon. MACD is not a bounded oscillator. It oscillates around the zero level, right? As we can see here, it oscillates just fine, but it's not bounded. So it's very difficult to say, well, MACD at 20 is overbought. Like overbought relative to what? Has it been there before? Because it's unbounded, that value, there's no peak and there's no absolute trough on the rolling basis. Okay? Lululemon, if you look back at it, I think it is a stock that is very interesting because it has this topsy-turvy, very violent, very trend-like personality. But over the long haul, it's a stock that hasn't gone anywhere since July of 2020, right? It was 300 bucks then. It got a bunch of bulls excited, right? Going up, knocking on the door of around 450, 500. And, the lows have been around 260. So if you think about the absolute peaks and absolute troughs on this relative basis, did they coincide with peaks and troughs in price? I would say yeah, right? But it only did so because of the violent nature of this stock and how mean reverting it has been over its history. If you look at something like the S&P 500, it's going to be substantially less evident. Active Trader Pro was refusing to work on a Friday after Independence Day for Peter here at the beginning, and now it's refusing to work for me. So Peter, I'll I'll turn it over to you, but I wanted to point this out, right? And I know I've been talking for some time, but please take over and we'll answer some questions as well.
Yeah, no, absolutely. And I appreciate you stepping in. As you mentioned, it is infuriating. So let me go ahead and now try to save you from some of that frustration. I stuck with that Lulu chart for just a moment. And off the cuff, if anyone has any other symbols, do feel free. Constantine, I know you've got a pretty tight stop here at the top of the hour, but a few things I wanted to comment on is you had mentioned kind of an indicator of indicators, which, through your description of this, I'm hoping, is becoming very evident to those of you that might be seeing this for the first time. Some of you that are no stranger maybe to this indicator have actually already commented on some of what you had mentioned, Constantine, is not solely using just this indicator. Now, by all means, if you're thinking about it from a trend perspective, absolutely. You could have this understudy, you can have this indicator, and you can think, as long as you understand what we had gone through, all right, upward sloping, positive above zero. What is that telling me versus the opposite down below that zero line from MACD itself? I think what I always like to try to instill on folks and what I've seen already, Cliff especially already mentioning, utilizing MACD with other types of indicators or even just those raw price levels like you were mentioning. And I think it gets back to, signals and drawing on where you were mentioning with MACD positively sloped up above zero. We've got the shorter period moving average at above the more intermediate term moving average. There are going to be no shortage of the trading systems, ways to manage longs or shorts or whatever it might be. It's going to be completely up to you to determine, do you want to solely look at price action above or below a single moving average? Do you want to then incorporate maybe a moving average above or below a different moving average and actually having those crosses? Cliff had said, could we maybe think about this as maybe a miniature golden cross or death cross, be it that it's the 26 and 12 by default that's being used? And you could argue that you certainly could, Cliff. I think anytime that we're looking at indicators themselves or the combination of indicators, you got to ask yourself, is this helping me make a decision based off of the information that you're getting. So I am a big fan of moving averages. I think I probably look at exponential moving averages more than others on the team, but I'm with Constantine. 9 times out of 10, if you hear networks cite, said moving average crossed above, they're more than likely talking about simple moving averages. But I digress. I think what I wanted to really draw on is when are you going to get that signal? The signal line here, as Constantine pointed out, that's going to give you a pretty quick speed to react. And, if you had maybe gotten out on MACD crossing down below that signal, maybe for a day or two, you're thinking, well, wait a minute, price is actually moving back higher. You can reserve the right to say, well, I was getting a signal. I needed maybe to manage, but let's go ahead and see. And if it pushes higher, and if the MACD line crosses back up above, somewhat like we had seen here, and then is able to go ahead and make a run, make a push, maybe that is helpful to you in your decision-making process. Maybe you want to go ahead and incorporate, well, MACD's below signal. That's maybe the first strike, so to speak. Let's go ahead and see if price is able to make a higher high, or if it begins to make maybe a lower low instead. Maybe that's a second strike. You could take a look at just the actual trend line, upward sloping itself, which not always going to work like this, but does happen to coincide with when MACD crosses down below and you actually have this, as you called it, Cliff, kind of that miniature death cross, just citing that the shorter moving average line is crossing down below. So I don't want to sound like an infomercial salesman and just make it sound like a daunting task, but the point, or at least as far as incorporating indicators and any indicator that you're thinking about, is one, is it helping you make a decision? Two, is it something that, potentially you're not wavering on too much? And then three, how is it fitting into your overall system and other indicators that you are using as well? Is there the kind of first strike, so to speak, or is that when many of you out there are going to be managing? Cliff was also asking about volume. Cliff, if volume is helping you, by all means. We have, of course, volume. Like to kind of call this volume at time. Maybe showing, hey, there's some big volume days on massive drawdowns. Maybe seeing if price is able to go ahead and put in some type of a base here. Constantine already pointed out maybe a positive divergence that we're observing. Maybe you're looking for a little bit of volume here on the upside rather than volume on the downside. And then one of our personal favorites as well. Keep in mind, if you are incorporating volume, maybe getting a view at volume at price rather than just volume at time could be also beneficial. And you're seeing this here with kind of these volume gaps or pockets, so to speak, a bit of a base here, given the fact that we've been hanging out around this $300 price point or so for some time, potentially being able to get right side up from a price standpoint above these moving averages. If that were to happen, like Constantine mentioned, then we'd be able to go ahead and see maybe that the MACD is able to cross from below up and above zero, and then potentially have some type of prolonged run. Not calling for that, but if you are incorporating MACD in your system, those are at least different angles or viewpoints that you could try to go ahead and incorporate. And if it's too much clutter, go ahead and remove what's on your screen. Stick to what works for you, but have some type of system. And moving average, convergence divergence can be one of those that I think is cited quite a bit. And if you're able to go ahead and visualize what it is trying to tell you, that could actually speak volumes, or at least speak towards potential setups. Like some of you were mentioning, maybe it's basing, looking for some additional signals or some follow through, maybe for a long, or maybe quite the opposite, seeing something that might look like a short on the way down. Completely up to you. All right,
Peter, I
Constantine, I
by
know
the
we're.
way,
Go ahead. Go ahead.
absolutely love. I love what you did there with the volume profile. Volume by price. You know that I'm a huge fan of that. Um, these are the types of things like, hey, market's making new all-time highs. I know that, let's say, we're not going to bring in the fundamental thesis of why Lulu is where it is today. Should it have been at $500 at the beginning of December to begin with, should also be a question if we're going to be talking about fundamentals. But here we are right now in terms of price, and you're trying to figure out, is there value here that I need to put the stock as one example on my watch list and say, is there, if the market is going to continue to be strong, right? Is there a potential turnaround catch-up trade here? Is this thing beaten down too much? Is there evidence of that in price terms right now? The answer is no, not yet, but it's not going to take a whole lot, right? We're already seeing substantial divergence in momentum, with positive divergence, which is a good thing. It is basing at a massive volume shelf, so it's creating volume by price, i.e., equal value, right? And so if it breaks through the downtrend line, if it gets above those moving averages, what do you think the next likely stop is going to be? Well, it's probably going to go with gusto, and it's probably going to go and fill interesting opportunity type setups they haven't triggered yet. And that's why I wanted to bring the stock, kind of into purview today, because it has been a dog. It's been beaten down. And by the way, I don't mean it in a derogative way towards dogs. I love dogs, but you know what I mean? It hasn't been a performer. So the idea here is put it on your watch list, watch that trend line, watch for the continuation of the positive divergence and momentum, watch that volume shelf. If it starts going, it's probably going to get going with gusto. Could be an opportunity, right? Always mind your risk. Always figure out how much you're willing to lose. Set a tight stop. Carry on. Peter, I am going to be jumping out here very, very shortly. I just wanted to say, um, in stocks, like let's say something is doing the opposite, something is doing the opposite of what Lulu is doing. Let's look at, well, the biggest culprit of them all, right? Let's look at Nvidia. Have there been uh, depictions of risk prior to the top, prior to the peak happening? And what are we seeing at this moment in time? What would bulls like to see happen? What would bears like to see happen? Again, from the perspective of momentum oscillator, right? It's boundless. So just looking at it at, 8.5, 9, or whatever that value was before that peak occurred wasn't very helpful. I mean, you had no idea whether historically it has been there or not. But you knew it was the absolute high. It hasn't been higher before. So there was no negative divergence of momentum prior to the peak and the turnaround. Um, there certainly was more of that in the prior chop, right? So if you think about what happened late February into March, like where did MACD peak and what did it start to do versus price at the time? Price revisited the prior highs, but MACD did not, right? So there was a negative divergence there that eventually led to a substantial continuation of the drawdown. So it was like print a brand new high, come back in, shuffle around a little bit, retest the high, knock on the door and fail, and go substantially lower. I'm not saying, by the way, Peter, that it's going to play out this way exactly this time around as well. But now you have a precedent, right? You want to be mindful of this. Like you can be bullish Nvidia here, but as a bull in Nvidia, from the momentum and price divergence perspective, what do you want to see happen? You want the knock on the door of prior highs and not a knock on that door and fail, but knock on the door and start making higher highs. Because if that's not happening, then it's starting to look eerily similar, right, to what it looked like last time. And if there is that momentum price divergence, there is the potential for the choppy, volatile period to persist for substantially longer than one might expect, right? So, Peter, I just wanted to bring this to everyone's attention because there's clearly a negative divergence in momentum right now. MACD is making a new low on a relative basis, while price is like, knocking about at 130 or so. You want that price to really consistently keep going higher if you want to be bullish here, because there's already, the thrusts lower being more powerful than the thrusts higher. That divergence is starting to settle in, and there's potential for it to persist for quite some time, right? Again, not to be negative on Nvidia. I know that's not a very popular view, but I wanted to bring that up.
All right, Constantine. I think we'll probably leave it at that. Appreciate all the kind words and phrasing that was coming through from everyone out there in the audience. Constantine, you stayed beyond my expectation because I know you've got some meetings that are coming up here. Appreciate everyone being here. You've got a choice to do with what you're going to do with your time. I know heading into a weekend after a holiday, but we appreciate you spending that time with us. Hopefully you learned something, if not about MACD, just the thought process overall, how all of these pieces to the puzzle can kind of fit together, complement each other, work in unison, and then, of course, which pieces to that puzzle you want to be using. Completely up to you, your prerogative. But once again, as we always say, it goes back to, is it helping you make a decision, being able to look for opportunities while managing risk? That's why we're traders. Find the tools that help you make those decisions, and you'll be better for it. All right, I'll be back a little bit later for a flags and pennant session. And Constantine, I think you're going to stick around here into the weekend with your off the charts with Constantine as well to cap out and round out this week. But appreciate you doing lots of that heavy lifting once again. Frustration sets in
No problem at
sometimes.
all. Well, welcome. Active Trader Pro just said, welcome back, Peter.
Yeah,
That's
essentially
all.
so.
Take care,
Well,
everybody. We'll see you soon.
wake up call. We'll see you soon.